Hey everyone, it's John Feneck with the Feneck Commodities Report. With me again this month is Don Durrett from goldstockdata.com. How's it going, Don?
Good, John. Yeah,
Good.
time for another interview.
Yeah, baby. Let's get it done today. There's some interesting things to talk about, considering that gold has now completely broken out since we last met in March, and silver has confirmed that breakout to some extent. So, what are you thinking about equities here, and what do you like?
Well, let's talk about before I talk about any stocks or kind of what I like. Let's talk a little bit about what's happening with price action.
Sure.
So, gold started running. It's been running now for a month. So it took off right around March 20th. So here we are, April 24th. And I mean, massive breakout at 2100, big green candle,
Hmm.
March, and then it went all the way up to 2400. And I wish we wouldn't have had this Iran-Israel confrontation because that kind of muddied the waters a little bit. We don't really know how much of that move in gold and silver was related to that because so
Agreed.
that we're kind of in the dark there. And I think the sell-off on Monday I think it was somewhat related to going into the weekend. We didn't know if is how Israel was going to respond, if it was going to, and it turned out to be a nothing burger. And so we got that sell off on Monday. I mean, that war literally
Yeah.
ended on Saturday. And so we had, the sell off on Monday. And we had a pretty massive sell off, 5% in silver. So silver went almost to $30 and now it's all the way back to 27. I have a 27.11 spot. I mean, almost a $3 sell off. So it's pretty massive. Really, really quickly. We've seen a lot of volatility in gold and silver over the last 3 years. I mean, we were trading at $21 in February in silver. So it went from
Right.
21 to 30, $9 move here. You would think that is a symptom or a sign that gold and silver are breaking out. And then we had that big green candle, from 2100 to 2300. Those look like signs we're breaking out. And most of the TA guys, are super, excited here saying, Michael Oliver, he's basically saying, we're ripping higher here, people, really, really bullish. Um, Gary Savage is a little bit more cautionary,
Hmm.
uh, basically saying this thing could turn around. We could have a significant correction here. So we're seeing people with different viewpoints. Um, it's really kind of I in the last 3.5 years, I don't recall a period where it was this uncertain which way we're going to go in the near term, or we'll say the next 30, 60 days. We could go down to 24 in silver, or maybe we hold at 26. So I have that range, 24 to 6. Gold is 1900 to 21, but I've actually moved that up. I'm a little more bullish. I actually think it's more 2000 to 2200.
Okay.
I could be wrong. Maybe 2000 doesn't hold, but it's hard to see where we're going here. But I think we're going to get higher lows. I do not, I think worst case we go down to maybe 1925, somewhere in there. That's kind of a worst case for me. And then silver, I don't know. Silver's more volatile, right? We just don't know.
Yeah.
So, silver could go down to $24 in a heartbeat. I mean, it's just it's tough to really understand the volatility in silver. We don't know what the floor, but that we're getting higher floors. I do feel I maybe I'm too confident here, but I've said this that I think that the 3.5 year correction is over
Hmm.
and that we are in an uptrend here
Yep.
and that we are heading. So the breakout for the miners is HUI 360 because that was the cycle high in August 2020.
Right.
So we need to get above that to basically start a new cycle. And I think we're going to this year. And so once we get somewhere above 300 in the HUIs, we got a ways to go. We're at 256. We got a ways to go here.
Yep.
So, but once we get above 300 in the HUI, I think I think it'll trend to 360 and we're off. Now, what's going to happen in the next 60 days? We're in big unknown. This is really unknown territory, but I'm bullish here. I think we are. I think we are trending up. Meta. One last thing, I'll let you talk.
Sure. No
Um,
problem.
Meta's off 11% in after hours. Uh,
Mhm.
we had the big four here, so this is now a big three, maybe. So Meta was one of those stocks that was doing really, really well, recently,
Oh
this
yeah.
year, really well, up 100% last year, I think. Really, really well. Now it's off 11%, after hours. So we got three more to go here, but stock market, I said, I was going to let you talk. I keep going. I think that the stock market is topped already for the year. So it's doing a little retrace here. I do not see a new high. Some people think it's going to rip. Some people think the stock market is going to rip higher and the miners are going to rip and gold's going to rip and everything's going to rip higher this year. I'm not in that camp at all. I think the miners need a risk off trade to get to 360. And so this meta sell off, I mean, maybe that's a really good sign for us.
Yeah, I think looking at Meta and Apple, AAPL, I mean, look at those charts. They're starting to show some vulnerability. Even the QQQ, right? I mean, that seems to have peaked. And when you're making all-time highs like the QQQ has, it's dangerous to short because you don't know where the high is. I mean, now you kind of see, okay, look at your favorite tech stock in the Qs or SPY, and they are starting to struggle a bit. And that's really bullish for, at least in my view, gold, silver, and the miners, because we will be seen as a safer haven. I don't think it's a safe haven in any way, shape, or form in terms of mining stocks, but it's definitely safer. And the value guys are going to start looking at Newmont with a beautiful yield, BTG with a beautiful yield, et cetera, and starting to say, oh, okay, like I can make some money in this sector. It's starting to move. Look at the gold price. Look at what that means for free cash flow for some of these companies. As you and I talked about in January, I pointed out then that Agnico, Barrick, and Newmont all beat earnings substantially in January. Now, let's see how they do this week and next week. I'm thinking they're going to do well. I mean, look at how AEM traded today. You could barely get it down, and it's got earnings tomorrow, right? So people are making bets that Agnico is going to have another good quarter, and I would agree. I mean, I haven't looked at analyst, estimates in terms of how they've maybe, raised estimates in the last 2, 3 weeks. Obviously, they should be raising estimates with gold, doing what it's doing. But I think you could see some analysts get caught flat-footed here in the next couple of weeks with these earnings announcements because clearly they missed it in January. Um, I think that could be really good for your thesis on HUI going from the 250s to 300 plus.
Yeah. One for me, it's all about sentiment. So sentiment in the miners it really died in 2013. So you had the 2011 high, and then 2012 it kind of hung in there, and then 2013 everybody just threw in the towel and you just started crashing, and you went down 2014, 2015, 3-year correction. But sentiment's been dead for over 10 years and it hasn't come back yet, and it's everything goes in cycles, and so we can see that sentiment hasn't come back yet. I mean, the Hui at 256 today, you have silver over 27, you have gold over 2300. These prices are well above where they were, very recent, a couple of months ago, for instance, and the Hui really hasn't performed. People haven't come back into the miners. They don't trust it. They don't believe gold and silver are going higher here. And I think the key here is back to that stock market. As long as people are bullish on the economy, bullish on the stock market, there's no money moving into the miners. And I think the big money has to lead. So,
Yep.
and so once you once Walt, you just talked about it, how people are going to look for a hedge here, and kind of rotate. And so once money starts to rotate out of the stock market, looking for a place to make money, I think commodities and gold and the miners are going to get some action. So once that happens, they always say that the majors are going to lead, and I think that is definitely the case here. The majors need to lead. So we need to get Newmont, Agnico Eagle. We need to get those stocks, moved. We need to get them like Barrick's around 38. We need to get it above 50 and trending
Right.
and pull up the entire market. And then the risk off trade starts to get some momentum. So if you go back to the 1970s, which I think is the most applicable period, because we didn't have any inflation from 2000 to 2011, there was no inflation.
Right.
And so you had, there was uncertainty in both of those periods. Absolutely. And you had gold outperforming the market. But the 70s, you also had inflation. And so you didn't have a place to go run to it, for instance, for bonds, because rates were going up. And so bonds weren't a place to hide. And there was more volatility in the 80s. I think, we weren't there, we weren't experiencing that. But there was actually a bigger move in the miners in the 70s than there were from 2000. As big as the move was from 2000 to 2011, it was bigger in the 70s. And so inflation is bad for the economy. One thing, the economy through the 2000s, I mean, we did have a couple of recessions, 2001 and 2007, but I don't think the economy was as weak as it was in the 70s. The 70s was probably the last time. I think the last bad recession was 79, 78 to 81, a really bad recession. So I think that's what's coming here. I think what's coming soon is we're going to get stagflation, which we got in the 70s, and stagflation was fantastic for miners.
Yep.
And so if they can't put the inflation genie back in the bottle, and inflation keeps trending, it's going to be hard to find a place to hide. You can't go, if you go into bonds, good luck, because if rates don't come down, your bonds are going to lose value.
Right.
And you're running to bonds to hide, and you're losing money. And if you put money in cash, maybe money markets will help you out, make a little money, but you can't hold it in checking account, because you're going to lose money. So if you just hold money in cash, so you're going to have to, lock it up maybe in a money market. And then stocks, I think stocks did terrible in the 70s. Inflation is bad for the economy. And so I think that's I'm looking at that scenario is what's going to I think going to start to play out here, where the economy starts going south, and the only place to hide really is going to be in commodities and gold, and miners are going to benefit. And that's when you get this risk off trade. I've been waiting for the risk off trade forever. I think that is the key to making money in miners.
Yeah, I agree with you on that last point. Absolutely. We started to see some decoupling last week. And I pointed that out on two different days over the last 2 weeks. There were two obvious days to me where gold and GDX were either flat or up, and the broad market was down substantially. If you remember that 2% move down on the QQQ, we had a good day in the sector, on that day. And that's really bullish to see bigger money starting to look at our sector as a safe haven, because we're just so beaten up. It's got to be like a value manager's dream to be looking at our sector right now and just, what do I buy first? It's like Agnico has been leading. So do you follow that today? Clearly, I think big money did follow that into earnings, which you didn't see before. You started to see selling before earnings in 2022 and 2023 in the large caps, right? Because you knew someone, you were going to get a haircut somewhere, and people didn't want to experience that. So really bullish action in AEM today, I think. But to your point, we need the others to come follow through, right? Because if you add up the percentages between Newmont, Barrick, and Agnico, it's about 30% of GDX. So tomorrow's a big day for the sector in the large caps, especially. We have a limited amount of time here today, Don. So let me just ask a general question. What are you looking at over the next 4 weeks here before we have our next interview?
Well, first of all, I've been a buy to the bottom investor during this 3.5 year correction, not a buy to the top. So for me, I mean, I've pretty much came to the recognition that the time to buy is when you're getting these big corrections. So I was a buyer when the Hui was like, once it got under 225, because we
Mhm.
kept going under it, right? So every time we go under 225, I was like, that's the buy zone. So it's like for me, 250 is like neutral. It's like I'm not even interested.
Mhm.
275, I'm definitely not interested. So I'm not really looking to be a buyer here. I was, I was telling everybody to buy to the bottom, like I was talking about the Mormons. I had these 7, 8 stocks that I thought were the prettiest girls, and you want to marry all of them, buy these things at the bottom. It turned out to be,
What? Well, you can go ahead and rattle them off for us.
well, you got basically mostly silver stocks. You got Pan
Yep.
American, Hecla, Coeur, Silvercrest, Fresnillo, Hochschild. And I did have Fortuna in there as a while, but then after the San Jose, I took them out. Um, and I'm not sure if I hit all 8 of them.
Maybe at core. Did you
Yeah,
say that one?
Coeur, actually. Yeah, it's the last one.
Endeavor, maybe.
Yeah. Gosh,
Yeah.
yeah, Endeavor's
Yeah.
actually, that would be the last one. So there's 8 right now. So yeah, so I basically said, once the Hui got under 225, just buy them to the bottom, and they went all the way, you know, and you're going to get the bottom. So if you would have bought Coeur, you would start buying around 250, 225, and then you would buy it went all the way down to 210. And then Endeavor, you'd start buying around 175, and you would have got it all the way down to like 145, and
Right.
on and on and on. I mean, you would have bought the bottom. So I like buying to the bottom and not buying to the top. So right now, it's tough. I mean, I'm not a buyer here. I'm on the sidelines, but I'm actually looking for a crypto
Okay.
correction. I want to buy some cryptos to the bottom because I don't think we're going to get any more really big, significant buying opportunities. But we've had a long time to build our portfolios. I mean, this market has been 3.5 year correction with a lot of big dips. For instance, I did on Sunday, but there are people that haven't been doing it. So now this is really a last opportunity, I think, for people that aren't in, because once the Hui gets above 300, a lot of these, especially the producers, you're not going to get these cheap prices. Like you get the Hui above 300, Hekla's probably going to be over 7,
Yeah.
when you could have bought it at 4. So I mean,
Sure.
you're giving up so much. But on Sunday, I did a YouTube video. You can go to my YouTube video and look at it. And I covered 35 development stories. They're all basically 10 baggers, maybe a few that are under at $3,000 gold. Now, what I did was I only included development stories that I think are going to begin construction within 3 years. Not begin production, but at least begin construction within 3 years.
Okay.
So there's a lot of names. All of those stocks are super cheap. Now, the reason why I focus on developers, and I focus on quality developers, is because they're so cheap. I mean, most of these developers are trading at about $10 an ounce for gold in the ground. And if they get into production, they could easily be worth $250. So that's 25x just on their gold in the ground. And the thing is nice about a lot of these development stories is this is their first mine. So they build the first one, and a lot of times you make your money on the second mine.
Right.
So, and just yesterday, you had Equinox pay for 160,000 ounces of production. They paid 900 and I think 50 million or 990 million. It was basically $6,200 per ounce produced. And if you go and you look at the quality mid tiers out there right now, they
Mhm.
basically paid the same price as a quality mid tier. So there's a bunch of mid tiers that are valued around 1 billion, somewhere between what they paid 1 billion to 1.2 billion, that have production around 120 to 170,000 ounces of production. So they're paying 6,200. They paid $6,200 for 160,000 ounces of production, and that 160,000 ounces is going to last about 12, 15 years.
Okay.
They basically paid the same price as a quality mid tier, and that just shows you. So that's the value. If you can get 150,000 ounces into production today at today's prices, it's, if you pay the total, the really going rate, it's about, $1 billion. And so most of these development stories are worth $1 billion plus, and they're valued at 50 million.
Hmm.
So, but the thing about development stories is that there's so many things can go wrong. I mean, it's high risk. They usually don't pay off. They usually break your heart. But I actually own every single one of them. Every stock that I went over in that list, I own every single one of them. So I don't need to really be adding here. I've already, built my portfolio. Now, of those 35, I only need about 10 of them to be winners, right?
Right.
If 10 of them are winners, I'm doing great. So I just, I buy them all, and we'll see which one works.
Yeah, that's
But
an important point for listeners, is that that's sort of what Rick Rule says all the time as well. When I worked for him, he would say, "Hey, John, I'm going to buy 10 or 15 names, and most of them aren't going to work, but three of them are going to kick, and I'm going to make a lot of money." And so it is the combined portfolio return, which I know you and Larry Leopard and me and a bunch of smarter investors understand, but many clients don't get this. They'll basically say, well, hey, you had 35 things over here. Why did 25 of them not do so well? It's just the way the sector is. It's basically, let's buy a bundle and see what works. Because look at that deal that I don't know if you caught that news on Labrador Gold this week, but I mean, what the heck? I mean, as an investor, I had a little position, but I mean, you're putting out good results on a project over and over, and then you sell to your neighbor for 20 million Canadian, I think it was. And the
yeah,
stock's gone from 14 to 9, so people are voting with their money, right? It's like it's just like people are sick and tired of companies giving up at this juncture. What are they thinking? I don't know. I'll have to do a deeper dive on that to really get the true story. But the
well,
price action doesn't lie. The price action doesn't lie.
listen,
That's it.
yeah, they dumped on shareholders, Labrador Gold. They just dumped on them. They basically said, "Give me the 20 million in cash. I'll put it in the bank, and then I'll live off it. Management will live off that for 5 years."
Correct.
But shareholders got completely, creamed. Now, Newfound Gold, they did great. It was a great acquisition for them.
It was, yeah.
So
It was a
I,
little bit surprising though, with gold trading where it is right now, that would even be talked about, right? It's
yeah,
like let's get some.
that's the problem with this whole sector, is that 8 out of 10 times management really cares more about themselves than shareholders. It's really hard to find a management team, again, about 20% of the time, that really thinks of shareholders first, number one. So when they sit around, they start making a decision, they think, okay, how does it impact shareholders? First, number one, right? Instead of number two. Clearly, in this case, it was, number two, right? It wasn't first. It's like, wait a minute, what about shareholders here? We're giving away our flagship. Shareholders, they weren't even in the discussion. And so that's a tough one. So that's what makes it so difficult to invest in the sector. Like in these development stories, again, only about 20% of them think of shareholders first. And those are and we don't know which 20% those are. And so those
Well,
are the 20 we
I
want to
think you
own.
can get a better sense. Like, me, I go to every conference I can, and having FaceTime. I see Jonathan just joined. I mean, having FaceTime with people like Jonathan and other good CEOs that I've met over the years really helps me, because then I can go back to my followers and say, look, I just spent 45 minutes with this person. Like, there's no guarantee of anything, but I got a good feeling about,
Right.
a
Yeah, but
better feeling about holding shares. I don't have to,
you, even right. I can absolutely love some CEOs and think that they're in it for the long haul, but they're only one voice. The board has a
sure.
huge impact on the direction of the company as well. If they sell, or do they build this into a large company? So
Right.
everybody has to be aligned.
Don, I mean, first of all, pleasure to meet you. But this is something that's very near and dear to my heart, because I live in the cesspool of what you're just talking about in Vancouver. And I again, it starts with people. So if you disregard everything I say and you just have followed, Bob Quartermain throughout his career, and the beliefs and the values that he has, and just what you talked about, alignment with shareholders, thinking about the shareholder first. I could give you 20 examples of what Bob and I have done together in Dakota that validate that thesis. But again, I'm coming in here, so of course I'm going to have a positive bias towards things that I've done. But if you weren't going to take anything, my word at face value, and you just spoke to my chairman, who's the largest shareholder, it starts with skin in the game. I agree with you. Most management teams and most boards don't have a cent in their own deal. And it's about how do we get more RSUs for ourselves? PSUs, DSUs, stock options. And between Bob and I, we've almost $10 million of our own money into the deal.
Yeah, that's impressive. I noticed on your website
There are many
under the
that have that kind of skin in the game and alignment. Every year Bob and I go to Europe. I've got almost 5 million BA miles. I've flown 4 times to Europe on my points with Bob and I. So I just can't justify spending $10,000 or $15,000 on a ticket. Even if we were a producing company, I think it's a waste of money. I think it's a waste of shareholder money. But again, I could literally get on a rabbit hole for a day about this stuff because I get pitched all the time. I own too many gold companies, and the most important criteria for me is people, and then how much of your own money do you have in the deal? Because if it's so good, why don't you have any money in it, exposed?
Mm-hmm. Right. Another key factor for management and the board is are they long-term focused or are they short-term focused? That's a key one for me as well, because a lot of these management teams are like, if we get a good offer for shareholders, it's in their interest, right? But it's only the contradiction is that it's only in the interest of the short-term investor. Right. So they say we see this all the time. A deal will get made and they'll say this was in shareholders' best interest. When actuality, shareholders are in 2 camps. There's 2 camps, right? There's long-term investors and there's short-term investors. And the long-term investors are focusing on the price of gold going out, not today's price of gold. Like I could care less about $2,300 gold. And so if you make a deal today, you make it at $2,300 gold.
But then Don, I couldn't agree with you more. However, you have to factor in dilution into that equation because every exploration story, every development story has to dilute themselves. So you have to weigh you have to look at the data and say, make reasonable assumptions about, okay, here's our resource or here's our economic study. Here's where we think it can get to. Here's how much capital we think it'll take to get there. And you're going to have to issue shares because I feel that any exploration or development story that takes on debt, it's a case of 9 times out of 10, that company goes bankrupt or has to restructure, retrade, whatever it is.
Right.
So I think when you look at the data and you make an informed decision based on your knowledge of the deposit and then figuring out where you are in the cycle and figuring out what your cost of capital is going to be, then you can say, okay, you know what? We are going to outright reject this offer. We're not going to sell it, tender our shares because we think there's a lot more value. And maybe that you can get an extra 10% or 15% out of the acquirer. But again, it's not linear. I mean, there's so many cycles within cycles. I'm a big Elliott wave guy and a big chart guy. And as a junior that's reliant on capital markets to live, you have to take all these different factors into consideration.
Yeah, I was actually going to talk to you a little bit today about dilution over the next 5 years. But just to finish up on this idea we're talking about, for me, I mean, if we just look at your company, right, Dakota, who's just starting drilling. So a project like yours is going to take multi-years to drill out and multi-years to build. So if you sold your company today, if somebody came in and made you an offer, for instance, that offer would be predicated on today's gold price, which I think is ridiculous, but that's how the industry works. And so as far as I'm concerned, if I look at your company, and it's kind of hard because you really don't have a resource, but I would project out quite a ways down the road. And so I would be a long-term investor and I'd be looking at your company, valuing you around, well over $3,000 gold. Now, most investors wouldn't do that. And so the only way that I'm aligned with your company is if you're thinking kind of that way. Long-term, gold prices are going to be a lot higher. And so every ounce in the ground that you find right now, I think, is worth a lot more than the market will give you credit for, if you will. So,
And I don't disagree with you. I mean, I just did a podcast earlier today about, this sort of de-dollarization trend and, gold pricing now finally going from historically always being in London or New York to Shanghai, and this countries that have seen what happens when you go against US foreign policy, sanctions imposed on Russia, and countries trying to settle transactions, something other than the US dollar, and they want to repatriate their gold back to their own country so it can't be taken away from them. So these are all massive shifts and themes that I couldn't agree with you more. Gold's going to probably be materially higher than the number that you just outlined. But again, trying to, you can have these different scenarios that you use internally, but you have to weigh in all these factors. And just to answer your point about a resource, we will have a resource out of Richmond Hill very soon, which I think will help for someone that's newer to the story like yourself. But again, it's gone beyond proof of concept. And yeah, so maybe I'll stop there and then see where you want to take this and go from there.
Yeah, let me jump in real quick because I didn't give you a proper intro, Jonathan. I met I started to track your story in Q4 of last year because I was just searching for, decent gold stocks in the US that had good listings. And you have a great listing on the NYSE. The ticker is DC, and trades with a penny bid ask most every single day. I know a lot of institutional and larger buyers look for that kind of thing. Financial advisors are going to be looking at stocks that have a $2 share price or higher in the States. Sometimes it's a $3, hurdle, but you're trading right now at 237 close. I mean, the stock is, well, in our view, is worth well over $3. And so, we bought more last week, and we'll buy more, once this goes live. It seems to be, versus the peer group, just a really undervalued stock. And just to kind of say again what you had just said, Jonathan, you and Bob own, I think, 15.4% of the company. If you go to your website and look at the Investor Hub tab, which is huge, because Don and I look for companies that have, about.
It's considerably more than that when you look at family trust, friends and family, in the States. When someone is not in your household and has a different address, it's not included in your ownership.
Right. Okay. That's good to know. But you also have the big boys in there: BlackRock, Fidelity, Vanguard. I mean, that's really nice to see, because these are not flippers, right? These are people that see the value and put positions on, and unless the criteria for their fund changes, they're not going to blow out of a position. So anyway, welcome to the show, Jonathan. We're happy to have you here today. And instead of going through a formal presentation deck, I just wanted you to kind of give us an overview for maybe 8 to 10 minutes, and then we can ask some questions.
Sure. So, appreciate the time. I know you guys are busy, but I think it's important to talk about how this company was formed and how this idea and how this concept came to fruition. So I was running my past company. Don was a company called Gold Standard Ventures, which Orla Mining acquired. So I was co-founder, president, CEO. It sold for about $300 million. They're going through all the permitting right now to permit an oxide open pit heap leach in the southern portion of the Carlin Trend. So we're kind of following a bit of a similar template in terms of consolidation. I was shown this opportunity in 2019, and I originally passed on it. This opportunity being in the Homestake district. We were shown a public company called Dakota Territorial Resource Corp. It had a small but strategically located land package about 5 miles north of the old Homestake mine. But what it had was the last mine manager when the mine shut down, the mine being Homestake, and he was a part of a local group that was trying to keep the mine open. But Homestake in San Francisco had already decided to shut it down. So this company was run by Jerry Aberley, and Jerry is not a capital markets guy. He's a brilliant, engineer. His knowledge of the old mine is really second to none. And Quartermain and I went down there during COVID. We had to quarantine for 2 weeks, as those were the rules in our country back then, and self-isolate for 2 weeks. But we went down there and we're blown away with the opportunity to be first mover and to roll up the district. So shortly after that, I approached Mark Bristow to acquire assets from Barrick out of their closure group. And this would be the third company under the Mark Bristow era born out of the Barrick closure group. The other two companies being Skeena and K92. And we've grown the land package from 5,000 acres to 50,000 acres. And sort of our main geological kind of proof of concept, our main thesis was that our Maitland project, which was the first acquisition from Barrick, which is contiguous, not 3 miles away, not 5 miles away, not 20 miles away, contiguous with the Homestake mine, had mineralized Homestake formation on it. And we knew that was the case because Homestake had drilled some holes, they made a discovery, and there was a historical resource on the Maitland project, which is also on private ground. And you will hear me harp on land tenure, the private nature of our land holdings, because permitting in the US certainly comes with a negative perception around, can you get a permit? How long will it take? And if you're a single asset developer, it can take 5 years, 10 years if you're on federal ground. So if you're a Barrick or a Newmont, you can afford to take that time because you have 10 or 15 other mines that are in production.
Right.
But if you're a single asset company, you live and die by that permit.
Mm-hmm.
So we've made 2 discoveries on our Maitland project. And most recently, our discovery in what we call the JB zone, which is in Homestake formation. We've recharacterized it into 3 ledges within the JB zone discovery. And this is akin to what's called the Western Ledge system in the old mine, which was 17, 19, and 21 ledges. So the old mine mined 40 million ounces from 9 ledges. Just consider a ledge a gold zone. So we looked at and analyzed 500 drill holes from Homestake into the Western Ledge system, so 17, 19, 21 ledge. Looked at average grade, average true thickness, and highest gram meter intercepts in each ledge. And what we're seeing in these high grade intercepts that we've hit in the JB zone that we have recharacterized into ledge 34, 35, and 36, it's the same thing. Our last intercept was 4.5 meters of 25 grams, 5 meters of 20 grams. We had a meter of 167 grams. We're seeing that same kind of high grade really starting to line up. And we have half a dozen or so hits in each one of these ledges. The most important distinction is that Homestake started hitting this mineralization in the old mine at 3,400 feet below surface. We are hitting this mineralized Homestake formation at 800 feet below surface. And these things are known to have a significant striking, vertical extent to them. But then above that, we have made a new discovery, which we called Unionville, which is in a younger package of rocks called the tertiary epithermal. And it's typically an overprint. And our discovery hole there was roughly 40 meters of 3.5 grams. So every drill hole we drill, we have an opportunity to hit both kinds of mineralization. Tertiary epithermal into Homestake formation. So we're very encouraged about these 2 discoveries, and all 4 of our rigs are drilling at our Maitland project, which is on private ground right now. We are coming out with a maiden resource likely next week for our Richmond Hill project, which is a mile to the west of Maitland. It's a past producer, produced a couple 100,000 ounces of oxide. We have it under option from Barrick, 800 plus historical drill holes. So really the phase 1 exploration program at Richmond Hill was designed at making this resource compliant. So we're going to host a conference call next week, a bunch of new images talking about the new resource and opportunities and next steps and plan going forward. Richmond Hill has a grandfathered permit, and it is on private ground. And Richmond Hill is 1 mile to the north of Wharf, which is the state's only active gold mine. And that belongs to Coeur Mining out of
Right.
Chicago.
Yeah, that was a great buy from Core. That was, I think, 2015 or 16 or something. They've done a great job there.
Yeah, they bought it from Goldcorp for $100 million, and I think they've taken out almost 4 times their capital. And it's starting, it's a mature asset, but it's a very well run, very efficient, really nice free cash flow generating asset.
Mm-hmm. I had a question on the permitting, Jonathan, because I did some homework, on Wharf and just online and whatever I could get. It seems like the governor there, who is one of Trump's VP candidates, is extremely supportive of mining. And that's huge because you're not only talking, that you're in the right jurisdiction, but you're on private land. So it's sort of like a double plus. Would you agree? Or
Yeah, look, she is really, if you listen to her talk, she's very passionate about supporting and creating opportunities to keep the educated youth in South Dakota. Part of the challenge that South Dakota faces is there aren't a lot of new large economic opportunities or economic development within the state. So a lot of the educated youth will often leave the state and go look for work elsewhere. So she really wants that educated youth, that talent to stay within the state. So yeah, she's been very supportive. And yeah, it looks like she's being shortlisted as a candidate to be some kind of running mate, VP, or some other meaningful position within the Trump organization.
okay, thanks. The other question I had is, I know at one point you were part of GDXJ. Are you a small percentage of that still?
Yeah, so the GDXJ rebalances quarterly. So in the March rebalance, we had an additional weighting of about 500,000 shares. So I think our weighting is like 0.4%. So we're in it. Then the Russell 3000 rebalances annually. That rebalances June. Depending on what trade desk you speak to, we are expected to have increased demand of anywhere from 1 to 2 million shares within the Russell 3000.
And that's going from a small holding within the Russell 3000 or a zero weight right
Nope, we're in the Russell.
now? Okay.
So we'll have a slightly, marginally larger weighting
Okay.
within the Russell.
That's not insignificant because your website's showing 99 million shares fully diluted. So if that's
So there's and those are warrants that trade and stuff. So there's 87 million and change. When you take out the floats, so Jerry, Bob, myself, some of the bigger people who aren't flippers and traders, it's not a big float. So if that demand comes to fruition, it's a meaningful kind of period of time for us.
great. So you have 4 rigs drilling right now, and you're putting out the resource on Richmond Hill roughly next week. What could you walk us through maybe the plans that you see for the next 3 to 12 months following what happens next week?
Yeah, so I think the focus of our phase 1 exploration program at Richmond Hill was really designed at infill drilling just to make the historical resource compliant. We didn't really step out and try to test and establish the limits of the system. So one of the things that we'll spend some time on is areas where we think the resource is open. So we'll have a slide that has the constrained version, unconstrained, and then unconstrained plus areas for expansion. There's 30 holes that we drilled that are actually outside of the resource. There's a significant silver component that won't be in the resource. There's a number of blocks that have 1 drill hole in it that has mineralization that's modeled as waste, or at the edges that's not in the pit. So there's a number of ways for us to make it bigger, improve on it, optimize it. It's a really good starting point. And again, it's on private ground, and there will be a program designed at bringing in some of that material outside of the pit, bringing in the silver, but then really trying to establish and define the limits of this system.
Mhm.
So that's Richmond Hill. And again, this is 1 mile to the north of Wharf. So there is an oxide component at Richmond Hill, which is important. And then at Maitland, where our 4 rigs are, it's really, two things. It's about trying to establish some strike length and dimensions to the tertiary discovery in the Unionville discovery. And then for this JV zone, it's really about trying to really convey to the market that this is a significant new discovery. I mean, we had in the last few weeks, the gold price has been obviously, robust. It's pulled back a little bit here, but again, still not really seeing any meaningful inflows into the North American ETFs, and still a lack of interest overall, in large part with the gold equities. We went from $2 to 296 and pulled back to 237. So we didn't close at 296, but it had that on that Friday, the 12th, it had that spike up.
Yep.
And then all the stocks kind of closed down as a very negative technical bar, where it opened at a range, made a new high, and then came and closed down in that bottom third.
Yeah.
That's a familiar pattern that a lot of people like to short when it breaks the bottom, with your stop being at the top. So, and that was, you look at Barrick's chart, Agnico, Newmont, Franco, etc. It was a very bearish, but it was due for a pullback given it 24.32, right?
Exactly.
John, can I jump in? Because we're running short of time. I need at least 10 minutes.
Go
Okay.
for it.
Okay, so first of all, Gold Standard Ventures, that was a development project, correct?
It was a discovery and then became a development project into the sale.
Right. So you were the CEO of that project. So you were pretty much building that mine. I mean, that was your strategy, correct?
Yeah, so we had assembled this land package. We had acquired a project called Pinion, which had a historical resource, and then we had a mile east of that was the Dark Star. There was a small historical resource. My vice president of exploration at the time, Mac Jackson, thought it was a very receptive host, and it was totally open. And we had, we made a new discovery, and then Dark Star had low strip, excellent recoveries, high grade. And
right. But my point was, you were the CEO and you were building that mine. I mean, you were comfortable doing it. You were comfortable building it and operating it.
Yeah, I had a great team supporting me. I'm
right. That's right. I'm just getting some background on you. And so, Quartermain, he's not an exploration guy. He's a builder. I mean, he's built companies, built projects.
But in saying that, he took a piece of drill core, which was there was a high grade hit that got into not Valley of the Kings, but he had a thesis that there was high grade at Brucejack. There was a large low grade resource. I think it was called.
No, I mean, everybody's a combination. If you're a developer, you're also an explorer. But I mean, what I mean is his main core, his core strength, if you will, is building companies, building mines.
I would say building companies, and I would say discoveries. I think if you talk to Quartermain, he would call himself an explorationist at heart.
Okay, fine. But if he finds it, he's going to build it.
Yeah, he has that skill set.
He has that skill set. Absolutely. I mean, he built Predim. I mean, he basically built that mine there. I mean, my point is, I mean, Quartermain, he's kind of a legendary guy in this business. So yeah, I mean, he's going to find mines like Ross Beatty. I mean, absolutely. I mean, they're going to find mines. They're going to build mines. They have both skill sets.
Yeah.
But there's not a lot of people out there. My questions where I'm going with this is that your team, it sounds like what you're trying to do, and you're valued this way. Is I have you as an exploration company, but I don't think you are at all. So basically what I do is I wait to see till you give me guidance that you're going to build the company. I usually list you as exploration. But today, for instance, I mean, you say you have a grandfather permit on Richmond Hill, you're getting ready to come out with an initial maiden resource. What is your next 3 to 5 year plan? That's what I want to hear.
Okay, so with Richmond Hill, it's about and we're going to have this disclosure and this information in the press release because we're going to host a conference call. We're going to come out with another resource in the next 9 to 12 months that'll incorporate a lot of this additional low-hanging fruit, the silver, and really try to establish the limits to the system. Really try to fill in that, constrained to the unconstrained and make that compliant. Then we will not do a PEA. We will go right to a PFS because we have 900 historical drill holes. There's a plethora of metallurgy that's been done on the oxide. And then you look at, okay, is this going to be a standalone operation? Or is it better suited for this to be a part of a complex with Wharf? And there's a lot of support for the right kind of M&A in the mining industry. There's been a lot of terrible M&A done that's value destruction, but assets that are right next to each other. Case in point, yesterday with Equinox buying the 40% of Greenstone from Orion, brilliant. Market loves it. That's going to be transformative for Equinox. So, that's something that we're going to look at. I mean, we've been quite consistent publicly with our thesis. We want to own the whole district. We think there's a massive endowment there. We think we're just starting to scratch the surface. Everything we're doing is on private ground. We have the means, the expertise, exploration-wise, engineering, permitting, mine building, and access to capital. So in 3 to 5 years, I think we have everything we need right now to be a mid-tier producer.
Excellent.
That's a good answer.
Yeah, that's really what I want to hear. Those are the companies that I like to invest in. Strong insiders, a plan, a strategy. The only unknown for you guys. I mean, you have the team, that's evident. The only unknown is how much gold you're going to find. So the question is, I mean, do you guys have targets? I mean, I scribbled down my notes that you need to find at least 5 million ounces to really have the kind of returns I'm after, because after dilution, so you're currently valued, the reason why I say 5 million ounces, because you're currently valued at 234 million fully diluted. So with the amount of money you're going to need to kind of get there, 3 to 5 years, you're going to dilute about a third. So you're really valued about 300 million. So I want you guys to get to, at least 1.5 billion, and then you got to have the money to build a mine as well.
So I can't guide you to what will be in the Richmond Hill resource, but what I can say to you is when you look at Richmond Hill and the opportunities there, then you go 1 mile to the east and you look at the Maitland Tertiary, then you look at the Maitland Homestake Formation. Yes, this is obviously, Jonathan Awde, but supported by data. This is a forward-looking statement that you're probably going to be considerably above that when you look at those 3 opportunities. And that's not finding anything beyond that.
Right.
So what we've said about the Maitland JB discovery that we've recharacterized into 34, 35, 36 ledge, that the Western ledge, which we're saying this is an analog to, based on analyzing, geology, stratigraphy, lithology, and data, that they mined 6 million ounces from 17, 19, 21 ledge in the Western ledge system in the old mine. That is our target in our JB zone discovery. Now, it's not to say we're going to get there. That could be a low number. We just don't know. We have to get more pierce points into it. But the fact that we're hitting it at 800 feet and they hit it at 3,200 feet is not a bad thing.
Right. Excellent. It's a good answer. So you mentioned M&A previously. Are you talking about you guys being the aggressor, you guys acquiring a company? Is that what you meant by M&A? You're not talking about somebody buying you.
No, I mean, look, I'm in like the ground zero for exploration stories. Vancouver historically has been an incubator for a lot of these exploration concepts. Any junior that says, oh, we're going to be bought out by this guy because we're proximal, that's terrible. all that's going to end up happening in that story is that the major's going to end up waiting you out. And, so yeah, we've been very clear. If you look at a map, we want to be the consolidator. That's our game plan. That's our thesis. That's our strategy. If over the next 3 years, someone comes in and wants to pay a stupid price, the only way that happens is through the front door, because we own shares. And now we're not going to own shares because we want to hold, and get another year's salary or a bonus. No, I mean, Quartermain doesn't draw salary. What he would make as non-exec chair goes towards our annual ESG causes.
Right.
In the going public raise, we did a $50 million financing. We didn't pay a commission. So I saved $2.5 million for the company.
Mhm.
We've raised another $50 million that we did not pay a commission. Sorry, we paid a small commission because we have done some of that through the ATM. So we've saved probably $4 million from a cost of capital standpoint, which for some companies would be a large annual exploration program.
Right.
And you're using frequent flyer miles.
And cheap when it comes to that stuff, and I don't really expense. If I'm taking someone out for wine or drinks, Quartermain will look at me and say, that's a luxury. And then that's implying that you're going to eat that, whether you like it or not. And that's just
Right.
That's good to hear.
Do you see yourself as being a CEO of this company? Do you see yourself basically in that role for, say, the next 10 years, building this company up?
I think the groundwork has been laid for the plan to be executed, but I think in the next maybe 2 or 3, 4 years, I'd like to transition up to chairman. I think that was sort of the original plan. Quartermain committed to this thing for 5 years. We're kind of like 2 years into a 5-year plan. Bob I'm lucky to have Bob in my life. I mean, he's not only a mentor, my business partner, but he's a friend. And, a lot of how he operates and thinks, I try to model myself after. And before even knowing him, we were kind of wired that, we kind of approach things in a similar way. We think about things strategically in a similar way and commercially. But Bob's one of the few people that I've met that can, be fluent in geology, be fluent in engineering and permitting, but then also talk to an investor and not make the investor feel stupid because he or she doesn't understand geology. A lot of geologists were really, really intelligent people, but they're horrible communicators. Some of them, not all of them.
Don't you make more money as a CEO than a chairman?
I'd make considerably more money as a CEO than a chairman.
So why would you want to transition?
Because running a company with multiple mines is 24/7, 7 days a week. I have a family with 4 kids that I actually like and enjoy being around. It's, I've been up since 3:30 this morning. It's never ending, and I'm not a spring chicken anymore. It takes a toll. So, I have the energy for days, but if I was a single dude, that'd be a lot different. I'm not. And I think my real value is just, capital markets, access to capital, conveying what our strategy is and getting that buy-in because of our alignment and because we have the right skill sets, we have the right people, and we try to be, as transparent as we can be with the market. So that's kind of from my own personal selfish John Awde. Yeah, I'd be giving up lots of money, but I own a big share position. So if I execute this strategy, my share position will, salaries are great, but how you create wealth is through ownership.
Right. Yeah, thanks for being honest. Yeah, I really enjoyed this interview. I didn't think I was going to like it this much.
So look, I mean, not a lot is known about Homestake, even though it was, still to this day, the largest single gold mine in the history of the US.
Mhm.
Now, there are complexes in Nevada that are bigger, but the largest single gold mine in the history of the US, it shut down in 2001. And right away, it went into Barrick's, closure portfolio. So a lot of the, fund managers who are maybe my age or even a little bit older have never been to South Dakota, don't understand how significant this geological event was. And we think we're just getting started. We think we're just scratching the surface. Obviously, that's a forward-looking statement. But when I was at BMO, the first presentation I did for this company was February of 2022. We hadn't closed the merger yet, I said, our primary geological thesis for Maitland is that there's mineralized homestake formation along this corridor. We've made a discovery. It's now becoming a significant discovery. We've made a second discovery in the tertiary, a younger age of rocks that homestake never assayed for. And I have to give James Barry full credit for being open to this different unit, because a lot of geologists get this sort of myopic tunnel vision, and James was really open to putting some holes into it and assaying it. And we made that new discovery. And then this is just largely what's been known. But so at Maitland, that's one of 3 targets that we've drilled. We have two discoveries in one target area.
Right.
If you go south towards the mine, there's what's called the North Drift discovery. Homestake drifted out underground from the old mine. They drilled a series of holes underground and they made a discovery. We're going to be drilling the up dip portion of that. So we know there's mineralization in the homestake formation. Now, why that's significant? I'm going to say something that's going to sound really crazy, but this is why it's significant. And this is factual. This is not me arm waving. 97% of homestake formation is not mineralized. I'll say it another way. Only 3% of homestake formation is mineralized. So when you hit gold mineralization in the homestake formation, it then becomes a function of vectoring, down dip, up dip, east or west. And that's what we're doing, and that's what we've done.
All right, excellent. Well, I got my questions answered. I really appreciate your time today. People learned a lot, got the story, because I think the story is kind of unknown. So it's good to get out.
Anything that we didn't talk about, or anything that you want to really dive into? I know you're busy, but I do have a few more minutes if there's anything else you want to talk about.
Jonathan, I think what we'll do is Don and I will wrap it up just talking amongst ourselves and just highlight a couple of things that you mentioned today. Could you give us how you prefer to be contacted if investors want to reach out to you?
I mean, I shouldn't be saying this, but I don't like emails. I prefer text or being on the phone. Just there's so much that can get lost in an email, and I travel a lot and I'm on the phone a lot. So, my preference is a text or a phone call. So
Okay.
you've got my cell number there, John, and obviously my email information is on the website, and you have that. So you're more than welcome to share it if you'd like.
Okay, great. We appreciate that. And yeah, I'll be seeing Bob next week at a conference for the first time. So I'm excited to finally meet him April 29th and 30th in DC.
Yeah, he told me that his presentation is done, and he's happy with it, and so he's very scripted. There won't be a second that's wasted or a word that's misused.
Yeah, I look forward to seeing that. I think he's got lunch on day 1 and I've got lunch on day 2, so it should be fun.
Excellent.
Thanks a lot, Jonathan. We appreciate you coming on, and we'll keep following the story and have you back on later this year.
Great. Thank you so much.
Thanks, Jonathan.
Thanks, Jonathan. Well, Don, that was pretty awesome.
Yeah, it was. I did not realize that that they could move so quickly. So Richmond Hill, they'll probably have a resource this year, and then next year they might start on a PFS. So conceivably, they won't have any trouble raising money. So
Right.
if it's permitted, I mean, they could definitely begin construction on that thing in 26, maybe. So that's very positive, because once they get into, it'll be interesting to see the size of Richmond, how many ounces. But if it's 1,000,000 ounces at like 6 grams, they're ready to go.
Mhm.
I'm not really expecting 1,000,000, but maybe 500,000 ounces on the first go round. But it's high grade, so I would think it'd be pretty good sized.
Yep.
So, if they can start off somewhere around 70,000 ounces, something like that, that pretty much pays for all their exploration. So it's, it's not a bad play here. It's not super pricey. I mean, it's at 234 million, but the location's great. South Dakota is a good place to mine. So they're going to get a really good premium. But it's kind of these development plays are, it's hard to really predict exactly how they're going to unfold. But if I think he thinks they're going to find more than 5 million ounces. I mean, I threw out the 5 million. He says he thinks there's more. So if they find 5 million ounces, you're talking about a 300,000 ounce producer, 300,000 ounce producer in South Dakota, at $3,000 gold is going to be worth over $3 billion. So the upside is huge if they find all that gold and they expand it, but it's going to take them a long time to get there. You're talking, they got to do a lot of drilling, maybe 2030, maybe they get to 200,000 ounce producer by 2030, maybe. So it's a long bet. It's a long-term bet.
Mm-hmm.
I'm not super excited about throwing money at it. But I like it. I mean, I have FOMO, that's for sure. I mean, people that own this stock, I think they're probably going to do well. But I like the location. I like the drill targets. I like the team. We definitely have a good team. So, there's a lot of positives, that's for sure. I can see why you're buying it.
Yeah. Well, I think having Quartermain in there really helps to build confidence because he's been pretty serially successful in his
He's
career.
legendary. Yeah,
Yeah.
he's legendary.
So why would he bother to be chairman of a company like this if there wasn't like an end game? And I've done a lot of research in South Dakota around Homestake. It's pretty amazing. There's a lot of upside potential, and you wouldn't think so in a place like South Dakota, anywhere in the U.S., right? Like if this were like part of like Quebec or something, it would have been drilled years
Yeah.
ago. But I mean, I don't.
Yeah, I I didn't mention Solitario. I almost did a couple times. Solitario is valued at $50 million.
Mhm.
So, but the thing about Solitario is they haven't even drilled a hole yet. So, but they have really good trenches at surface. So, Solitario is in South Dakota too. So I like Solitario better, even though it has more risk. So with Dakota, you're betting to get a 5x return. It's really a 5-year investment. I mean, maybe it could take off before then, but because it's going to take them a while to drill this thing out and to build it. I mean, 4 or 5 years, I think it's going to take some time. Now you could get a 2x, 3x return fairly quickly. Absolutely. Just on Momo, people going in and buying this thing, pushing it up to $1 billion. But then it gets stuck. It'll get stuck at $1 billion. It'll take a while after that. Whereas Solitario, they hit a few big holes. It can go from 50 million to 250 million in a year.
Yeah.
So,
Yeah, no, I did reach out to them just so you know. I called and I left a message and at least one email, probably two, and I haven't heard anything from management. So that's
oh man,
just another one of those, interesting situations. And I put in the email for sure that you and I were interested. And it's like,
yeah,
maybe you could Google search us, like
I,
just that, and
I'll
not
do it.
bragging, but
Yeah.
geez, I mean, if you're not answering influencers' emails, then why are I guess you're not answering any retail guys' emails either.
No,
But I'll take a second look at that. That's interesting.
I'll
But in
do
terms
it.
of Jonathan, when I reached out to him, he reached out to me same day. Like that's like he just said, I've got a wife and 4 kids, and I don't want to be doing this for the next 10 years. At least he's honest about it, right? And like, and
Yeah,
if
very honest. Yeah.
you put another 3 years in, which it sounds like he will, to get to the chairman role, you pass the torch to someone else at 28, 2,900 gold. Like it's fine. This is going to work.
Right.
Because one of the things that doesn't work, as you know, Don, in the mining space is not having enough capital to get to the finish line.
Yeah.
And when you have a New York Stock Exchange listed stock, take a look at that Investor Hub guys on their website, Dakota Gold.
Capital's not going
It's an amazing list of shareholders, and like that's what another thing that caught my attention when you see the big funds like BlackRock, Fidelity, Vanguard in a stock.
Yeah. Yeah,
they're not selling, and then you just keep
there's
that part of the float in good hands.
yeah, there's really only two red flags here, and one of them is kind of pink. It's not really red, and that's how much gold they're going to find,
Right.
because they have some really really good targets, which he mentioned. So, I mean, really, I mean, this stock, you're not going to lose money if they find 2 million ounces, because that's an 80,000 ounce producer. You're going to make money, but you might not get a 5-bagger. So, that's, first red flag. The big red flag for me, the one that really slows me down, if you will, is the timing. How long are we going to have to wait for this thing to materialize? How long I mean, they really haven't drilled very much. And usually, it's going to take them, it takes a while to drill these things. Well, South Dakota, they could probably drill year round. But they have a $30 million drill program. I think they have about 25 million in cash right now.
Mhm.
So they're going to rip through that. They're going to have to raise another 20 million next year, probably. But if they get some good drill holes, which I think they will, then, it won't dilute them as bad, because they're probably, by the time they try to raise money, they'll probably be at 300 million. So 10% dilution is 30 million. So it's not going to kill them. But then it takes a while. These drill programs take time. So they're going to have to go through about 3 seasons, and then we're not going to get a PFS until next year at the earliest, the end of next year at the earliest. So this is going to be a really slow grind for this stock to get over $1 billion. It's a long-term one. Now, I just did a long-term one, Osisko Development. Osisko Development is not going to ramp up production until 2029. So that's a 5-year wait. So this one is probably a 5-year wait too. And Osisko Development is probably the same thing, 5 to 10 bagger, which is a better play, Osisko Development or Dakota? They're very similar. They're similar stories.
Mhm.
But Osisko Development doesn't have as many red flags because we know they have the gold. They just got to get through the permitting and the building.
Right.
There's less risk with Osisko Development, but they're both really long-term waits. International Tower Hill is another one that's a super long wait. Vizsla is a super long wait. So there's a lot of these stocks that are really, really long waits before you actually get there. Gold is going to take a long time to build both of their mines. That's another really long wait. So
Mhm.
I don't mind waiting 5 years for some of these plays, but I have so many. It's like, do I really need another one?
Yeah. Well, I think they've got 4 drill rigs turning right now. They'll come out with their report next week, as he said, and that'll give us a little bit of an understanding of what they already have. And then
Yeah.
we wait for the PFS next year. But the fact that they have 900 drill holes and they have all the data on that, I mean, that's pretty cool, because
Yeah.
that takes a lot of money in today's market to generate that kind of data. I mean,
Yeah.
drilling in the U.S. It is expensive. It
Well,
depends on the state.
here's really what it comes down to, is you got to compare it to some comparables, right? So let's say we compare this to Newmont. Now, Newmont, in my opinion, is going to be $150 plus stock. So you basically get a 3-bagger out of Newmont with no risk and a dividend. And it's going to participate. So if gold goes to $3,000 in the next 12 months, I think Newmont's going to go to 150. So, I mean, immediate 3-bagger with a dividend, whereas this stock, you can see the risk reward difference. So why would you buy this and not buy Newmont? The only way you would do that is if you were gambling, you're saying, well, I'm going to hold this thing for 5 years and maybe they find 10 million ounces. I'm going to gamble. If they find 10 million ounces, I'm going to get it maybe a 10-bagger.
Yeah.
So I'm going to go for the gamble 10-bagger versus the sure thing 3-bagger with Newmont. So you have to determine how risk averse are you, how conservative are you, how much do you want to gamble on this stock. See, I'm gambling on these development stories because you're just there. And the other key here is they could grow through acquisitions. So it
Right.
could be a 10 bagger through exploration success and through acquisitions as well. But Newmont, I mean, your best case is really a 3 to 4 bagger, but this one, more upside, more blue
Yep.
sky. So you want to bet on the blue sky or not? That's
Yep.
your choice.
I think that's a great analysis, but I disagree a little bit in that you really don't have to choose one or the other. I think you buy both. I mean, that's what we do in our portfolio construction is buy the Newmonts, the Agnigos, the Barracks. Okay, that's one part of our portfolio. Then we're going to look at development stories and mid tiers and explorers and royalties, right? You break it down and you kind of decide how much risk you want to take, right? Because royalty companies, like I've mentioned, I think Vox Royalty to you off camera once because it's got a NASDAQ listing. It's trading at $2 right now. VOXR is the ticker. Their price to NAV is ridiculously low versus Franco or Wheaton or any of the other royalty companies.
Right. We're somewhat unique in that we'll hold over 50 stocks. The
Yes,
average person's going to have 25 or less.
true.
And
Which
it
is a lot of
might not,
risk. I
right,
say
it
this every week.
might not make sense for them. That was kind of my point. But
I
yeah,
get
for
you.
people like me and you, we don't really we don't trade it that way. We look at we just look at development stories or producers, you know. We don't compare them
Yeah.
in that way. I just brought it up for somebody that, you know, that doesn't have a whole bunch of stocks and they're thinking of buying this.
Right.
You start looking at, you know, some of the comparables.
Yeah, well, I would encourage people to do the work that I did last fall, which is look at the district, right? Wharf 1 mile away was a huge home run for Core. They bought that in 2015, I believe, from Gold Corp for I think 99 million, as Jonathan said. They've made 3 to 4x on that already, and that's in 8+ years, right? Like, I mean, that's a real catalyst, I think, for this company in that they already have a relationship there, and it's a mile away. It's not 25 miles away, right? So like, there's something there that you could see a combination forming down the road, in my opinion. And then when you look south, there's other little juniors and stuff. I don't know where Solitario is, you know, geographically in this mix, but it's a cool state. I really learned a lot by doing that homework last fall, and I put some money in the region.
Right, right. All right, I guess we can wrap this up.
Yeah. Well, Don, thanks again for another good month here. We'll do it again in May.
Yeah.
Um,
Do we have another company lined up in May?
Let me check and see if we have a confirmation yet. Let's see, May. Yeah, we've got on May 22nd, we're doing Guanajuato
Oh,
silver,
awesome,
which is,
awesome,
yeah, it's
awesome.
going to be a really good timing because
Yeah,
James
good
Anderson's a
timing.
really
Yeah,
good leader.
Guanajuato, in my opinion, you know, the only risk on Guanajuato for me was share dilution,
Mhm.
keeping the company alive because they're losing money. But as soon as they generate free cash flow, that company's going to get, I mean, the leverage on Guanajuato is just off the charts. You have a lot of risk, but you have huge reward. Yeah, I really like Guanajuato. I mean, you're talking, there's your 10 plus bagger, what I love. So yeah,
Take a
I
look
look,
at the stock recently, folks. I mean, it went from 11 cents to 23 cents in a few weeks. I mean, that's the
that's,
same thing that it did back in March of last year, Don. If you look at the chart, I'm not looking at it as we
that,
speak, but I
I
remember
mean, that's
during the
peanuts.
financial crisis, right? You had
Yeah,
that a series of stocks like this one, Silver X, et cetera. They all doubled or close to doubled in a month
right.
because of the leverage to the price of silver. And that's something that you and I say over and over again, but not every stock is built the same. This one has a lot of leverage. Their ASIC is high versus the peer group, but it's not high now because silver has run up. I mean, when you're at $22 silver and your ASIC is 23, then you know you're at a different point in the cycle, I think. But now with 27.11, as you said, spot price when we're recording this on silver, I think you've got a lot of potential in a stock like that. So we're excited to have James on May 22nd, and we'll get that live to everyone a few days after. So thanks again, everyone, for today. We appreciate it, and we look forward to talking to you soon.